Welcome to DS Trading, where trading is done simply by being patient and paying attention. That is the key to your success. This is a chart of oil. Now we got to figure out what to do with the price action. That's what the candles represent, price action on the chart. And it's DS Trading's contention that the volatility and price action of a market can be represented by the steepness of the plot of the averages of price. And what we have here, we use a number of different types of moving averages and crossovers of moving averages. And this is a particular moving average, and we call it the go line. The dashed line is the go line. And this is called the core MA. And the core MA is a crossover of two different moving averages. And the crossover is signaled by what I call the boat arrow, an anchor, but the boat arrow. It's there, and it's there, and it's here. And each crossover represents a potential for trade. But how do you know when to trade? Well, when the go line reaches 22 degrees, it becomes yellow. And when the core MA hits 40 degrees or more, it becomes yellow. And when the two are both yellow on top of the candle, it's a good entry point. And the angles are also recorded up here. And it only is recording for the last candle. To make it easier, as we add more indicators, I'm only putting on the chart the plots of the core MA and the go line that meet the criteria for them to turn color. But the arrow is still there as a heads up that there is a potential for trade. In the effort to save time, instead of going through each one, I started here at 7 o'clock this morning. And you can see that here's an arrow. You have a bunch of them going up and down. This is something called chop. You had one. That's why you have to pay attention, because you don't know which one is going to be the next potential trade one. So that's why you have to be patient to get through this and pay attention, so you see, I got a potential trade here. And then we come down here, and then the go line says, hey, we got a trade. And you trade it, and you got in 6 ticks. Recommend all new traders, and I still do it myself, and I'm not so new at trading. I do a fixed target of 5 ticks. 5 ticks on the oil represents $10 a tick, so it's $50. So every time I push the button, basically, I make $50. And just to give you another, here's another one that would have made it. And then you have chop again. You go, we'll have to watch. And then you've got an arrow. Yellow and an arrow. I got a potential. So this is going up. You'd have gotten that one. You could have gotten in here too. But I'm not trying to take the fringe trade. I'm trying to take the ones that you know you could have made. That one. Here's one that you could have made, but I didn't count it. You'd have had your 5 ticks on that. I'm trying to be very conservative in the demonstration here. Here you have the signal, the boat arrow, the crossover. You've got this. This would have been 25 potential ticks. You got this for 10. got some chop to go through. That's why you have to pay attention. And then this arrow, and you had the yellow ahead of time to give you some heads up even before the cross. You hop in here, you got it there. You actually had a fixed target of 10. You'd have made it because it would have gone up to here. And we go through, and you can see we had lots of opportunities to score winning trades. And in fact, I went to 1130. And we had the potential, we had 17 trades. And if we had taken 5 ticks per trade, that would have been 85 ticks or $850. The commission is about $4 a trade round trip, so that would have been $68. So you'd have netted $792 or $176 an hour you'd made. There were a total of 229 ticks in these boxes, and minus the $68, it's still the same 17 trades. So you're still minus the $68 for commission. That would have left you with $222 if you had captured all the ticks, or $494 per hour. I'm not suggesting that you're going to get any ticks unless you exercise patience and pay attention. What we're going to do now is put a couple more indicators on here, one at a time, to show you how we can help you stay in the trade longer if you decide to go more than 5 ticks. It'll also be an easier way to spotting them, give you some advance notice that the trade is coming in addition to the arrow. What we have here is the addition of the alert zone. There's 2 parts to the alert zone. And I left the previous indicators on. So this is the go line, and this is the core MA, and these are the trades we took. And the 2 parts of the alert zone, one is the ribbon, and it's a crossover of a different moving average than the core MA. But you cannot have a core MA unless you have a crossover of the alert zone. So the crossover of the alert zone indicates a possibility of a core MA, but it's not necessarily going to happen. It's just an alert. And the other indicator on the ribbon is the slope, and when the slope on the ribbon gets to be 50 degrees, we get this yellow and purple coloring saying that it's 50 degrees. And similarly to when this hits criteria, this is in conjunction with another indicator which is called the OLAG, which we'll discuss next. When they both are hit 50 degrees, we will have a high probability of a successful trade. The other indicator on this chart are a polynomial regression. That's this blue and the orange-red line. And you'll find that trades taken outside that start outside the PRC line, like this one, do better than ones that start inside. Now this is really close to the PRC, and this is actually a continuation basically of this one here, but it's very close, and when they're close, that's good too, and this was good. I mean, all successful trades are good, but notice that when they're inside and it didn't start from the outside, there aren't as many trades to take. And in fact, we didn't take as many. There's one there. This is inside. We did take that, but we're taking it based on the core MA trade so far. This is near the outside, and look how well that did. So as you can see, all the big trades, longer tick trades, happened outside the PRC, and when they happen close to or outside the PRC, that is one of the ways, you can change your target to 10 or 15 and still do well. Here's another one that started outside the PRC, and we did 14. And maybe when we add another indicator, we might have started up here. It's hard to tell right now. This one started outside the PRC. The PRC is here. Again, this was 14. So another way of garnering more ticks is to pay attention to the location of the start of the trade, and you'll get 14, 15, 16 instead of 5. This is internal, and we only got 6. This was internal, and it was based upon the Core MA Go line trade, and we got 8. So this is an overview. So we'll continue with adding another indicator. We added the OLAG indicator, and the OLAG indicator is the one that has the white and blue ribbon. Remember that the alert zone is the green and fuchsia ribbon. And it too, they both have 50-degree slopes marked on them when they do achieve that criteria. And as a slight review, the trades that happen outside the PRC go further than the ones that happen inside. The other nice thing about the 50-50 angles, we call it the 50-50 trade, if you're near the PRC or outside it and they come together, that is another trigger for entry. This just so happens that it coincides with the core, and it often does. And core, and you'd have gotten this trade, you'd have gotten in a little sooner because you had the cross of the 50-50 down here, so you could have gotten in a few ticks sooner. So you'll get additional trades, and you'll get to stay in trades longer with this. This is a valid trade here that they're overlapped. You can get in here. You'd have gotten that trade that you didn't get before because it didn't hit the criteria of the Core MA. But often it does. But it's great confluence for a trade. I mean, you're outside, your confluence is here. Oh, we took that. Okay, we took that. But this is more confluence, so it gives you even more assuredness, not only to take the trade, but it gives you the assurance to stay in the trade until the crossover. And that crossover is a signal that the moving averages of the alert zone crossed over, and this diamond is the zero lag crossover. Now this is a trade you could have taken that you wouldn't have gotten on the Core MA trade. You'd have gotten in here and you'd have come all the way down to here or further. Core came back in. But it's just great confluence. We didn't take a trade on the Core MA here because we didn't have enough. But look at this. We've got the two together, and you come up there and you'd have gotten a trade there. If you were fast, you'd have gotten a trade here for 5 ticks. But you did get the core trade for that. And we the core trade helped us get the this one too, but again, it goes past where the core is, so helps you stay in. So just to give you an idea that we have lots of confluence, and trades are simply done if you're paying attention. We're getting close to the end. All right. I don't know why we didn't. We could have taken this trade here too for an additional trade. They're both together. And this trade here is outside the PRC, and away you go. In fact, you get in again. So there's lots of ample opportunity to get additional trades with the addition of the alert zone and the zero lag, and they do work in tandem together. You need them both to have 50 degrees before you take the trade. And the PRC band helps you. See, this was outside the PRC band, and look how far it went. This is outside the PRC band, and look how far it went. You know, it's this would have been a tricky trade. You wouldn't have gotten it for various reasons. You wouldn't have gotten into here at the soonest, and it's past 12 o'clock, so it wasn't on the last trade. But you'd have gotten in here, and then you wouldn't have gotten in on the core MA. So you'd have gotten in here. So there's another trade there. So it's a great indicator. The last indicator I want to talk about is the short-term market bias, or STMB for short. And that's this bar on the bottom. And blue means it has a positive bias, meaning that it's going to go up. And white has a negative bias, meaning that it's anticipating prices going down. And this is really a great tool in that, remember, this is only highlights. There's lots of details we haven't done. But basically, all you have to do is that with other conditions being correct, that you see that this is going up, and you look for the 50-50, and it's going in that direction, and you got to trade. This is, you're looking here. It says it's going down. Well, it is going down, but you have to wait for the first, when they're first 50-50, and then you get in there and take that down. Here, there's no 250. You only have the 50 degree on the OLAG. You don't have it on the alert zone, which is the green, so you don't get in. As you'll learn, you have it on the alert coming down, and you have it here, but you're just passing the PRC, so you're waiting for this. Once it goes to the PRC, you'll see that it usually goes back the other way. So knowing that, you wouldn't take this trade. The green STMB is here. You can wait. There's no 50-50. There you are, 50-50, and away you go. Bam. A green line. You know, there's a fuchsia line before the red line. So but there's no angles. Now you have a green right next to it. That's great. And you got it. Bam. Try to take trades that are outside the PRC. You got it down. You got that trade there. This trade is outside. It's in the middle, but it's going down. You'd have gotten that trade. You have confluence with the core MA, but you'd gotten in a little sooner. So you had got more ticks. You come around. No 50-50. You got the pink line again, and you get in right there. 50-50, and you have correlation with the core MA as well. again, you've got the 50-50. You don't have the core, but you've got the 50-50. It's going down. It started outside, and we'll teach you how to stay in the whole way. You have confluence, and away you go. I mean, you got another 10 or 15, 20 ticks on that trade, because you could have gone a little bit further. So just to give you an idea, it's a flavor. There are other indicators. This is what the chart looks like with all the indicators on. There is some duplication. As you can see, the STMB is here as well as up there. And the reason for it is, depending on where the chart is, the chart you can look up or down. This is a redundant indicator with this. It's called the Twiggy. And this is the MACD-BB, which is a very important indicator. But keep in mind that you have to trade your personality, and you can have as little or as much as you want. If you have remember, this is the only setup you need to make money. Every other indicator that is put on the chart is to either give confluence to this move or to garner additional tricks during the trade. So if you like it plain and simple, you got it. And if you like it a little more complicated but still simple, you got it too. It's just confluence. And remember, while you're looking at all this, you're only looking at all the time, you're only looking at the hard right edge as to where the price is. If you're in a trade, you won't want to see which way it's going, but you're only looking here. This gives you an idea of the pattern. It has other uses, but you're only focusing on this part right in here on the right-hand side, the hard right edge. If you have any questions, let me know. There is a cost involved, the cost of the indicators, which is nominal compared to other systems. And the additional cost is you need to donate to 10% of your winnings to the charities of your choice. And that is the barrier to entry. A nominal fee for the indicators. Nominal fee is less than $500 at this point, and it's a $5,000 system at least. But I want you to donate 10% of your earnings to charity, not just one time, forever, that you're using the system. Or if the system enabled you to achieve higher levels of your already success, to give it to charities of your choice. And that's it. If you do want additional information, certainly get back to me, and we'll take it from there.